So, good evening, Madhavji. Are you able to hear my voice? Is it audible and is the screen visible? I have shared the screen and my website is currently open there, 50eyes.com. Just give me a quick yes, Madhavji, Girish, and we'll start off the webinar. Okay, thank you, Girish. So, first of all, before we move any further, let me give you a quick introduction. My name is Neerav, and I'm a trader and also a mentor. I'm also an admin of 50 Eyes Market Analysis or 50eyes.com. As you can see, this is my website. Here I present my views. Specifically, my area of expertise is Elliott wave, and that is what I use to project possible market directions and share my trading strategies and also for my own trading. To give you a very quick introduction about my achievements, whatever webinars or videos that I produce online, I have kept a deliberate record of them in the forecast accuracy page here, 50hours.com/forecast accuracy. And the most important thing which I want to point out here is that I have kept my accuracy higher than 80% for the last 6 years, or maintained is the proper word here, right? So this is beyond or above all industry standards, where even 60% is considered extremely high. So as you can see, 2016 83 something, 2017 87 something, 2018 84 something, and 2019 84.88, 2020 88.52, and 2021 is 82.22. So this is my achievement here. And given that my area of expertise is Elliott wave, I have also written a book on the same subject matter. My book is titled Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott waves. It is available on Amazon Kindle. So that is, if you buy it, you can get instant access of it on the Kindle app itself. That is on your phone, computer, or tablet, whatever you have. So that is all for the quick introduction about who I am. Let's now move forward to the introduction of these webinars. So this is the 36th in the series of applied Elliott wave webinars. I do one per month, and in these webinars I share my expert opinion on crude oil, gold, S&P, Nifty 50, and BTC, and sometimes some other instruments, right? So because it's the 36th, that means we have crossed 3 years, more than 3 years of these live webinars, right? And in this 36th webinar, let's quickly go over what we will be going through. We will be going through, as always, WTI crude oil, followed by gold, followed by S&P's 500 and Nifty 50, and maybe if we get time, BTC. And I have also mentioned in the registration page that we will be discussing about the analysis on Luna, where I was able to catch the exact time the market reversed and then it went on to the zero levels. So the way we will proceed, I'll just give you a quick structure. First of all, I'll discuss a particular chart. Once the chart discussion is over, then I will ask you guys if you have any questions. If you have any questions, kindly wait till the point where I ask. Then you can post them in the comment section. I'll make sure to go through them and answer you, right? So I am live on multiple platforms. So maybe a few comments might get missed. So don't worry about that. I will try to be as thorough as possible and make sure that no mistakes or unclear part is left from my end. Even so, you can always watch the recording, because these webinars are recorded and left on YouTube and my own website as well, right? So other than these live streaming platforms, obviously. So now let's start off. Just give me a quick yes if you can see the chart of crude oil right here on screen. You must be able to see 4-hour chart. Okay, thank you, thank you. So now let's have a quick look at what was it? 1 second. 17th for crude oil. Crude oil. Okay, so the last webinar was conducted, I believe, either on 15th April or 14th. But whatever it was conducted on, it is published on the website on 17th. So actually, I think it must have been conducted on 16th April. So anyways, At this point in time, the market was somewhere over here. And let me check quickly what my view was. So what I'm going to do at this point is I'm just going to check what the analysis was in the last webinar, and then they from there on we will build up that worked out or not. If that did not work out, what was the problem, and so on and so forth. So I'm just going to quickly check what happened with what I was saying in the last webinar on crude oil. Always turn the video quality to 1080p. Okay, so as you can see, I had two main views on crude oil in the last webinar. One of it was that the wave one is going to the upside, will be followed by a corrective ABC leg down. And once the corrective ABC leg down is complete, the market will then proceed to the upside to make new highs 3, 4, and 5. Right, that was one of the main views shared. I believe there was another view where I was supposing that this was A up, B down, and C up complete, and then the market will go on and give a new leg down, that is new lows down, lower than this last low of around 94 levels. So those of you who are not well aware of what LE wave is and what are the patterns I'm really talking about here, I'll just like to make you guys quickly aware of the fact that I'm talking over here about a flat pattern. So a flat pattern is 3 waves up, 3 waves down, and 5 waves up. So if this was a flat pattern, then these 3 waves are complete. These 3 waves are complete, and this 5 wave last progression, we were assuming that either it is complete, in which case it would just fall. Secondly, we were assuming that it's continuing, in which case it will give a small leg down and go up for new highs within the swing, right? So now let's quickly check on the actual chart of crude oil NYMEX futures. So somewhere over here, let me just quickly recheck. Okay, so somewhere over here, 17th, that is, yeah, somewhere over here the market was when we did that webinar, right? So it did give a correction, but the correction was very small, and then the market went up. And as you can see later on, the count has completely, I would not say completely, it is sort of still following the same sort of theme. If you remember, when we were analyzing this part, I was saying that it possibly has gone up for 5 waves up, will probably give a correction and then go up again. So in that sense, we can still say that this was the 5 waves up, and instead of a simple ABC correction, we have a flat correction, right? And then another leg up. So in short, the analysis does has played out, right? It did go lower after our analysis in 3 waves and did go higher, taking out this high or the swing high. However, it did not really do it in the very sense that we were expecting to do it. We were expecting either completely strong break to the downside or a strong move to the upside. So none of them has been achieved, even though the Elliott wave count or the wave count progression has been as it was expected to be. So now that that count has sort of performed, but not as we expected, let's have a quick look at what the market seems to be doing right now. Again, I will go into the basics of the concepts we are discussing here, or basics of the patterns we are discussing here. So if you are not very well versed in Elliott wave, or even if you are completely new to it, don't worry, just listen to what I'm saying. And if you have a question, you can always put it in the comment section. So first of all, from this point of reference, which is around the level of 130 something on the NYMEX futures crude oil, what we have is a corrective leg down, or a leg down, let's just say. And from what it would look, we may have a corrective progression in the sideways direction. So in this particular case, I'm assuming that if this is an A wave, then this is an A up, B down, could be followed by a C up, or at least in this count, and then it could go on for making new lows, right? So that is one of the hypotheses here, and this hypothesis is suggesting that we are very likely going to see a high higher than 116. Once the 116 level is broken to the upside, the market can then see a reversal to the downside, because this pattern is what we call a zigzag pattern. That is my current opinion on this market, right? It is possible that this pattern is going to become more complex. Maybe it will go to the nearest level or the near to the last high, like within the 90% range of this leg down. In that case, it will be called a flat pattern. But then again, it is not really important, because at hand, what I'm really saying is, let me just emphasize again, that the market has gone down here for a wave A, and it is going to go up for a wave B, and it should take out the high of what is this level, 117.14, if this is going up for a wave B, right? So basically, we have in that case a trade setup here. The trade setup is really simple, but it is more or less a short term setup. Excuse me. So the short term setup we have over here is that once the market is near this last high of 114 point something something, then we can initiate longs for it to take out the high of 117. So it is not a very big move as you are seeing over here, but this is the conservative zone which we expect the market will take out. So this will be a short term long trading setup as per our ABC count, right? And as I said, the second possibility is that the wave B could end up near 120ish levels, or it can go as high as 128ish levels. So in that case, what we can do is we can trail our profits and see, or what you call, manage our positions according to that. So that's my current view on light crude oil futures on the NYMEX chart. And I think, okay, we were also able to predict this high over here, this reversal. Anyways, uh, without getting too much into the intraday posts which I have posted in my private Slack group, you guys first let me know if you are clear on what I just discussed. Did you guys understand the crude oil chart, my current view, why I suppose that this market is going to go higher and break out the highs of 116.82, or let's just say 117 on the futures chart NYMEX? So quickly in the comment sections, I'm waiting for a yes, or even clear will be okay. If you just type in clear, I will know that you understood whatever I was saying. And then we will move on to the next chart. Okay, so I see one clear and typing. So let me just wait here for a few seconds. Okay, so I see we have on daily time frame, we can see a triangle pattern, daily time frame. So Girish, I think I have covered the bigger time frames in another of the webinars, but I'll just take a look at it very quickly. So yes, it could be a triangle, but let me be very clear. Where is what A down here and ABC for B up? It does not look like a triangle to me at all, right? It can still form into a triangle here. I think you are talking from this point here, right? So right now it's not a well-formed triangle. You can just draw two trend lines like this anywhere basically, and then you can say that it looks like a triangle. And the reason I'm saying that it does not look like a very good pattern is that this B wave falls way too short. So it is theoretically still possible, but to have an A here and a B here is a bit unlikely. So at this point, I will not consider it. But obviously, if it keeps going sideways and never breaches the last high, then obviously we'll fall back to it. So let's then. I hope that my explanation here was clear to you. So let's now move on to the next chart. For crude, as I said, we will wait for short-term long setups, and setup I've already mentioned. Right. Next chart will be of gold. So this one went like exceptionally well. Like whatever I said exactly, it performed just like that. And not only on this particular occasion, but I believe gold, we have posted multiple forecasts for the last 2 3 webinars. All of them have been picture perfect. For instance, I believe we were able to catch this leg down when it started off. Actually, that is what we predicted in the last webinar. And some part of this also we were able to catch. Anyways, let's remove if and else and actually check what I was saying about gold. So gold starts around 20. So let me just enlarge. So this is the recording of my last webinar. So I'm just checking what I said about gold in the last webinar here, right? Let me just quickly play the play button here and see. So is it working? Yeah, it is working now. So I believe we were suggesting a downward move for wave C continuation. Yes, that is what it looks like. So in the last webinar on gold, my view was that the wave C in the downward direction is still continuing. What wave C means, if you are a beginner in Elliott wave, I'll explain later. But let's just quickly check out the entries here. Okay, I'll just pause the video where I have says yeah. So this was the entry for the shorts with that whatever that level was a stop loss. So basically the view was that this C is still continuing, and the view was that this is the 1 and this is the 2, which will be followed by a 3, and then there will be a 4, and then there will be a 5. So basically what I am saying is that if the market went lower than this level of 1910 something, then we will see lower levels two times, that is two swing lows, and it worked out precisely as expected. So let's quickly check that gold chart with US dollar against US dollar, and last analysis was in April. There it is, somewhere around, yeah, somewhere around this point, somewhere here we were making the last analysis, right? And as you can see, I was pointing out that if gold takes out this low around 1910, it is actually 1900 precise level, then we will see lower levels, at least two swings lower. So basically the trade setup was lower than 1900 sell, and two swing lows at least. And that is exactly what happened. The market actually literally reversed right after making a small leg up after our analysis or the webinar, and it went on to make a low around 1800. So entry around 1900, and the current level or the current low registered here in this swing is 1800. So a clear 100 points on gold, which is quite big. If you ask me, if you trade gold, you will know what I mean, against the US dollar. So that pretty much worked out in our favor. So let's have a quick look at what I'm thinking right now. So for the analysis right now, I'll just zoom in and discuss the picture here. So at this point in time, my view is that this is possibly an impulse in the downward direction. If this is an impulse in the downward direction, then what I mean by an impulse is a wave 1 down, a wave 2 up as a correction, right? And then a wave 3 down, and then a wave 4 up as a correction. Once the wave 4 is complete, then we will see one more leg down, which will take out the low of wave 3. So that is what we mean when we say the word impulse in the downward direction. So if you see on the left hand side the actual chart and compare it with the rough diagram I drew on the right hand side, then you will quickly observe that the 1 is complete, so is the 2, and the 3 down is what I'm supposing is complete right now. Yep, I'm supposing that it is complete. So if that is the case, then that means we are currently in the wave 4 progression, right? 3 is complete. So let's tick mark that. And if we are in the wave 4 progression, that means that once the wave 4 is complete, we will see a leg which will take the market lower than the last low. So there are multiple ways you can play it, right? Simplistic way is that you will assume that this is a wave 4, and if it is a wave 4, then once this trend line is broken, then you can take partial positions to the short side or the downside, right? That is, this trend line breaks, you take partial position. By partial position I mean that if you generally trade with 10 lots, then in this particular case you will go in only with one lot or two lot, depending on your risk management, right? So how to assume wave 4 is complete? Good question, Madhavji. So generally wave 4 will complete at the 38.2 retracement of this wave 2. So if we draw a Fibonacci from this point to this point, which is the end of wave 3, then the 38.2 retracement is generally where we expect that the wave 4 will be complete, right? So let's see if I have drawn it already. If not, then I'll draw it right away in front of you guys. So this is the fib, right? So this is the 38.2 level that I was talking about earlier, or just now, not earlier. So if that is the case, then this market can, in theory, go to the level of this particular price, which is around 1870. As I mentioned, we drew the Fibonacci from this point and ended it over at this point. So if that is the case, then we can expect the market to retrace till around 1869 and it will be just all right. Okay. So till here, expectancy is there, right? Now, as I was saying earlier, one of the trade setups is that you wait for the break of the downward trend line, which is this trend line. If that is broken, partial entries can be taken, right? Second setup is a bit more conservative. You wait for a break of the last low, which is somewhere around 1800-ish levels, right? So once we see a break around the 1800-ish levels, we can then assume that either wave 4 is complete, or even if it is continuing sideways, in which case it will still go and break out the last low and we will have our profits. So these are the two trades. One is we wait and spot the reversal of wave 4. Wait for spotting the reversal of wave 4 as the market becomes more clear. Second view will be that we wait for the market to go near the lower levels around 1800, and there we take partial short entries and wait for it to fall further, right? So that's our main theme on gold. Okay. But here is one thing which I would like to point out. It is possible that the bigger structure, this whole thing is not really an impulse. So how will we know that this impulse down setup is not playing out, right? Let's quickly look at that. So the main theme or the main idea here would be that if the market goes much higher than the 38.2 level, which is around 1867, let me just actually draw a line here. So if the market really goes higher than this 1862 mark, what is it? 1867 mark, sorry, 1867 mark. That is, the market sustains somewhere here and then spends good amount of time and makes one more high, then we will have to assume that this market is doing something else, and at that point in time our short setups will be invalidated or we will not care for them. Okay. So again, to conclude, in gold, our first bias is that we wait for a short setup near the last lows around 1802. Second bias is we wait for a reversal around 1867 levels, right? And we expect the market to go and take out the last low of around 1787. So basically, hypothesis one, our first view or thought process is that the market will go down. Second thought process is that if the market sustains above 1862, then we will have to 1867, sorry, above 1867, then we will have to invalidate the hypo one, and then in that case we can expect the market to go higher as well. So basically hypo 2 is not suggesting a direct trade, but more or less what do you call, a view which may not be tradable right away, but it is indeed still a strong and clear view. So I think that's enough elaboration for gold. I believe the setups were rather clear and I have explained to you with the rough outlook and the rough structure as well. Kindly let me know by typing in clear here, and if you have a query, please type it in the comment section as well. To wave 5 complete, can we take wave 1 length? Yes, generally, Madhavji, what we'll do is we will measure the length of wave 1, which is this particular leg, and project it from the end of wave 4. So let's just say that wave 4 completes here at 1867 something level. Then we will project this much length from 1867, and that will help us figure out the targets for the wave 5 down. So this will be a rough estimate. Of course, there are other ways to figure it out, but those other ways are going to become much more clearer once the wave 4 is complete. So yes, roughly speaking, you can assume that if this is, let me just quickly do it, if this is the wave 1 and wave 4 completes at 1867, then there is a rough outlook suggesting that possibly we can see a level of even 1709 or 1710 something. So that's the extremely bearish view. But as I said, if the market sustains above 1867, then we will relegate those bearish views and we will then focus on the upsides. Finally, type in clear in the comment section. Okay, so I see already there is one clear written over here. I'll wait for a few more responses before we move on to the next chart. Oh, good question, Girish. Very good question. So the thing asked is that how can we assume that wave 5 will be an impulse? So that's true. We don't really know if there is going to be an impulse or is it going to be a diagonal. But Girish, do keep in mind that if it's a diagonal, let me just clarify it for the other viewers. So if the whole thing is a diagonal, then the wave 4 will go and penetrate the wave 1, right? That's what diagonals do. And when it does that, don't you see that it will cross 1867? Yes or no, Girish? So if it will be crossing 1867 to become a diagonal, then obviously we are obviously relegating our downside counts. That does not mean we think that the market will not go down. That just means and only means that even if it's going down, we will consider the upside possibility as well. So basically, even if it is a diagonal, we will let it complete the fourth wave, and once it goes above 1867 and sustains there, we will then proceed to reanalyze the market, and in that reanalysis we will consider this possibility. So basically it is there, but for the time being it is sort of irrelevant because it will become clear once it sustains above 1867. Does that make it clear? Can be a truncation if wave 1 touches. I'm not sure what you mean by that. There is no such thing as truncations for wave 1 in a diagonal. Truncation is a concept on wave 5. Milind is asking on Tube that Nifty will be covered after S&P. Milind, as always. Okay, so Girish is clear here. So let's move on to the next thing we have. Next thing we have is the chart of S&P's 500. Okay, so let's quickly check what was suggested in the last webinar. S&P is covered around 2740. Let's quickly check. So in S&P, what is this? Okay, yeah, there it is, April month. So this is the chart of S&P, and let me see what I am exactly suggesting. So my suggestion here looks like that the first leg down is A or 1 followed by the B or 2, and that 44.19 level is where the market was at that. What is it? 43.95 is where the market was at that point in time, as you can see over here, and that the market will go lower because obviously if B or 2 is here, then the next leg will be downside. Okay, so that was one of the main views on S&P in the last webinar. Of course, you can check if there was something else discussed. I mean, alternate counts and whatnot. Let's quickly check the chart of S&P right now. Okay, it has performed obviously precisely as expected. And let me just quickly check. The level at that point was, the market was at what? 43.95, right? So we were suggesting that the market will go lower than 43.95. So yeah, there it is, the arrow and everything. So 43.95, let's quickly check what the low was afterwards. And 43.95 is somewhere here. The market since then has gone on to make lows and lower lows and lower lows. And the current swing low we have is around 38.12. So 38.12, that's a significantly big move. And not only that, more importantly, it actually proceeded precisely as expected. It just went down precisely after we suggested that it will go down. So this one went and played out exceptionally well again. So at this point, my view is, as you can see over here, at this point when it broke this channel, this CN or bluish color channel, my view was that this market is probably completing the A, B, and C three-wave correction, but it then again went on to break this last low as well. So that means two things. First thing that it could mean is that this is just what do you call this is just extension in the wave C, not extension. The wave C is just a little bit elongated. Generally, what you expect is that after a sharp dip like this below the channel, you expect the market to go up and then proceed, right? If the correction is complete. That is to say, if this was an A, B, C correction. One second. Yeah. So if this was an ABC correction, generally you expect the market to give a sharp dip like this and then go back up. So an ABC correction in Elliott wave terminologies is three legs down, correction up. These three legs down are called an A. These three is called actually one second. Yeah, that's correct. This is will be called a B. And by the way, in this case, this is a diagonal. Let me just quickly correct. This is a zigzag correction. So in this case, it's a diagonal here. Let me draw it much more properly. Yep. Yeah. So it's a diagonal here followed by a B wave which went up, and then it will be followed by a C wave which will be again in 5. So in this particular case, we were assuming that the C was complete here, but because it went and broke the last low as well, it means two things. First, that this is not really an ABC. If it is not really an ABC, then what is the alternate count? Let's check. The alternate view will be that this is a very strong downtrend in progression. If it is a very strong downtrend in progression, then this A will be replaced by 1, B will be replaced by 2, and C will be replaced by 3. If this really is a 3, then what will be happening is that we will be seeing a correction. Let me remove the clutter. A correction in the upside direction or a pullback, whatever you would like to say technically. And once this pullback is complete, we will then see a fall again. So basically, again, as I said, two things. Let's first quickly go over the scenario I just discussed. One is complete here, two is here, three is here, correction for wave 4, and then leg down for 5. Right? If that is the scenario, then this means that this is the 1, this is the 2, this is the 3, and this is the 4 either here or it is still continuing sideways. Whatever the case is, we will see one more leg lower, right? So if it is complete here, then theoretically it is possible that this was the leg lower and this was the 5. I personally don't really care at this point about that count. The reason I'll just explain in the second scenario. So the first scenario or hyper one, we are suggesting that if we see a sideways movement in price, then that sideways movement can lead to one more leg in the downward direction. The reason is we expect the sideways movement will be a wave 4 like this. And once the wave 4 is complete, it should take out the last low. So that's our primary view on S&P, right? Secondary view is very simple, and secondary view basically suggests that the wave C is just getting a little bit elongated, and although it is unusual for it to go lower and then lower again like this, it is not really something that does not ever happen. So in that case, we'll relabel as C still at the last low, and we will then consider that the upside possibility exists now. But, and a big but here, for the upside possibility to even be considered, I will not be interested in this market at least until it takes out 4200 levels. So as long as the market does not trade above 4200, the possibility of downside, which I just discussed as our hypo one, is the one which I want to consider, is the one which we will pay emphasis on, and is the one which suggests that there will be some possible sideways movement which can then lead to one more leg lower on this market or on this instrument, right? So that's my main view. Sideways to bearish or straight down bearish. That's my main view on the S&P's 500. Secondary view is we will consider longs only and only once the market takes out 4200. Why you have taken 4200? Because it is supposedly the last kind of support region or resistance region, whichever word you would like to use, because these are interchangeable terms. Let me point out the reason for that as well. So see, in general, when you do price action analysis, a support resistance is a region where you have seen price congestion, and price congestion is just a fancy word of saying that you have seen sideways price movement. Sideways price movement basically means something like this. Market goes up, then goes down within the same range, goes up within the same range, goes down within the same range, right? Something like this. Market goes up, goes down, extending the range a little bit, but then falling back again within the limits of the past level of high. So the reason for taking 4200 is, if you observe, we have a congestion here, right? We have a congestion here, right? If I extend the previous congestion and then overlay the last congestion, you will find that 4200 is sort of not in the middle, but sort of near the lower boundaries. It is sort of the middle of the second congestion. So if this is the first congestion, this will be the second congestion. So it is sort of in the middle of 4200 is sort of middle of the second congestion. So that's why I am interested in it only and only if it does that. By going to 4200, the market will be suggesting that the past support, which has now become resistance, I'm testing it. So if it sustains above 4200, the test will sort of be validated, at least from a price action perspective. And that would also suggest that we can possibly sustain this market and take it higher, or the bulls can sustain this market and take it higher. Is that clear enough? The simple price action explanation on the S&P. Okay, thanks. Very good. Okay, that's good. And at this point, kindly type in clear if you guys are clear on whatever we discussed so far. If not, you can just post in the comments. I'll just wait for a few moments. How to trade an American stock index from India? Away asking. Away, you will have to open an account in the American stock market, right? If you have somebody there, you can take the help of brokers. You can also use many of the what do you call funding companies, right? There are a lot of them. You just type in what do you call proprietary trading firms, and a lot of them will pop up. You will have to pass some exams from these companies, pay some fees. If you pass their exams, there are generally two exams. First is the they will give you some risk amount and they will give you some fake money, and if you are able to make the target amount of profit without breaching the risk amount, then they give you a second account, and on the second account you have to again do the same thing, and once you do it, then they will give you a real account, and then whatever profits you make on it, you can do profit sharing and whatnot. So that's one way. Second way is, or the easier way is, if you have somebody there, you can just get into an agreement and trade like that. Okay, any questions related to what we were discussing here? I guess not. Everybody is clear here. Somebody, Sunil is asking, is wave 3 extended? Wave 3 extended on what, Sunil? I'm not sure. I don't see an extended wave 3 here, but it's not really much of a issue for us. We don't really care. We are mostly concerned about the possible directions and how to make the game plays. So if you want a clear answer, post a clear question, Sunil. So before I move forward with BTC and Nifty, quick few things. First of all, my book Think with the Markets is available on Amazon. These are the specific country links. If you don't find your country name here, you can just type in the name Think with the Markets by going to your country's Amazon page, or just type ASIN this number and just search it, right? If you have read the book, I will appreciate if you can leave a detailed review. We need reviews to keep the book searchable within the Amazon ecosystem. That is exceptionally important. Second thing is that my next training program is planned to be launched in the first week of June. So those of you who are interested should fill in the forms and get the get your inquiries in front of me so that I can respond to you in due time and we can clear the formalities, contracts, and I can explain to you how I will help you in this training program. This is, first of all, I'll just take a few seconds. This is a detailed 3-month program, 3 plus 3. In the first 3 months are the classes done every weekend, and I cover live markets. That is, we discuss the actual charts, and then the charts are followed up in my Slack group, right? So within my Slack group, I post all the follow up charts on whatever we are trading so far. So as you can see in the gold also, I'm posting every other day. 9th May, 10th May, 11th May, I'm making posts on what's happening. So we go to the granular levels and discuss the concepts in live markets. That's why it is called training program LT or long term, right? And lastly, the course on training program is an active course, that is, I will be putting in my time. But if you want to learn passively and you want to clear out your basics and reach an intermediate level so that you can enroll in my training program, then the video course, which is called the Elliott Wave video course or the complete guide to professional trading with Elliott Wave, is available on the website. Just enroll in it and watch the 50 plus lectures, 7 plus hours content um, in it and clear your concepts. So that is from my end announcement for the next batch, June first week, and obviously the book. I have written it, so I have to promote it. So next on the agenda is a very interesting discussion. Before we move to Nifty or BTC, I reckon I should discuss it first. And it is, you may not very well be surprised because I do keep catching highs and lows all the time. But this was an interesting one because everybody in the world was looking at it. And it is the chart of Luna. I have also posted a link of one of the charts from the group. And I'm not kidding when I say that I was able to catch the exact turning point in Luna where the whole fall started, even before the fall started. Right? So let me just quickly show you. So this is the post on Luna in April 5th. Firstly, let me again see if you guys are interested in listening on my interpretations of Luna. Just a quick yes in the comment section. Very, very quick why or yes. And then I'll go on with the interpretations or the charts. Okay, I've got it. So we have a yes here. So let's just first quickly check the April post. April 5th. Check the date here. Let me see what I have. By the way, I was also able to catch this leg up in Luna as well. Where is that? Yeah, this leg up also we were able to catch. But anyways, yeah, why anyways? Let's just check everything. So this is the first post in Luna. The date, as you can see, is March 29. Sorry, March 29. I suggested that the market should go higher. Market was around 105, right? Let's check the next post. Market went 17% up. Let's check the exact price level. March 29 was 105. Now, April 5th, market is around 115. So it has gone higher. So our forecast played out, right? However, do notice I am suggesting that there's a diagonal here. So for those of you who do not know, a diagonal is basically a termination pattern. I actually don't like to use that word. A diagonal is basically a pattern which suggests that an probably important leg is complete. That's the more appropriate explanation, right? Once the diagonal is complete and once this yellow trend line is broken to the downside, the market can see a sharp reversal. Generally, it is also something that suggests the end of a bigger trend, right? Not always, right? But in this particular case, I have already spotted the diagonal beforehand, and we are basically waiting on this trend line to break for our confirmation for possible shorts. Let's check. This is April 5th. Ending diagonal has been spotted. Let's check further in the timeline and see. April 6th. Let's see short-term sell of expected. Let's see April 6th. I'm saying sell of expected. So as you can see, the market has broken below the trend line, and we are expecting around 10. What is it? April 6th. April 6th. Shorts triggered. We are short, so I'll just type short or write short here. and the market started falling around 112 level, let's just say, or 110. Roughly speaking, around 112, we are saying that the market is a sell. So we have spotted this turn, right? Let's just quickly follow it through. April 8th is the next post. Let's see. April 8th, I'm suggesting that even though the fall is still remaining, it might give a small up move before the fall. So that's just what do you call small pullback within the downward movement, right? Let's check with April 19th. So what is it? April 8th, April 19th. Let's see. So April 19th, the market has gone lower, and at this point, I'm assuming that if the market had to turn to the upside, then it is possible that it has made the low around 76 something. So as at this point in time, I am considering the possibility that maybe the downward movement is completely over, right? That is April 19th. So April 19th may be complete. Down may be complete. Short closed. Let's see the follow through after April 19th. And this is April 24th. This one is posted from my phone. And here I saw that this market is forming a very, very bearish outlook. Instead of going following the upward trend which it seemed to have established, it is going on to break the last low. So I was at this point very, very sure that this market is going to fall, right? And generally what we take is we take this length of the first leg down and project it from the second leg. So 1:1 will be our target from for the downside, right? I did not have the what do you call time to check the exact targets. They are sort of useless anyways. Anybody can measure 1:1. That's just kids stuff, but we will check the target here for the sake of record keeping. So as you can see, it is posted on April 24th. So now we are at APR or April 24th, and I am suggesting short again, right? Previously, remember we were able to catch this fall, and now we are able to we are going to catch the biggest fall there, right? Let's see. So April 24th, I am saying sell short. What is the chart level? Level is around 89. Price is 89. So that's put it in bracket. So after April 24th, April 25th went down precisely as suggested. Last four given way for blah blah blah. Let's check the chart. So April 25th, I am still holding the bearish view. It is sort of going higher, but my view is that no, this market is definitely weak and it should definitely go lower than what is this 87. So it should break the last low. And as I said, if we measure this leg and project it from the last point of reversal, which was supposed to be here, then we can get an exact target. But anyways, the direction here is more important. So bear with me. So we are now at April 25th. I'm still pointing downwards. So shorts are still on. Let's see afterwards. Okay, afterwards there is no post, and I did try to check the chart of Luna, but obviously it has been removed from TradingView because I believe it is now trading at 0.10. So basically, literally nothing, almost. So it is supposedly one of the biggest scams of this year, I think, in line with the NFT nonsense drama which has been going on for quite some time. So, but anywho's, the point here is that with these series of charts, we were not only able to catch this up leg. Oh, yeah, we were not only able to catch this up move from 105 to 115. Let me just type it here in a box. We caught 105 to 115 up move, right? Then at 112, we predicted the fall, right? We closed the fall on April 19th. Let's check what is the April 19th chart. So we closed the fall around 80, 84 something. Let's just say 84 something. That was a sell short we made. I'll just type short here and long here. And then we again went short around the levels of 89, and from that level the market has gone to 0.1. Okay, so I would like to make it very clear. I did not know that it was going to zero point 0.1, right? That is not something I knew at that time. But I knew one thing, and that one thing was that this market is going to fall. So if the high was, let's just take it, what is it? There it is. So the high was around 115, right? And our measurement of the first leg down was till the level of 76. So 115 to, let's say, 75 for the sake of simplifying the calculations, right? So 75, 25, 35, 40. So that means we were expecting a move of 40 points from around the level of 90 something. So 40 points lower than 90. You do the math. We were expecting somewhere around 50ish levels, which I'm not kidding is still a very big move to catch, right? So that is what you can do if you know how to properly apply Elliott wave and you become a master of it. Again, I'm not saying that you can just pick up Elliott wave one day and do it the another day, because I've been doing it for many years. I have my own proprietary setups which help me identify these turns and twists, and that's why I'm able to predict so many twists and turns. But anyways, tell me, how was this case study, or how was this catch of the big fall that everybody's talking about? Your response at this point is definitely something I'll read. So I'll wait for a few seconds. Manoj is saying super. Madhoj is saying very high. I'm not sure what that exactly means. Maybe he means we caught a very big move. That's what it should mean in this context. What about the other participants here? I'm waiting for your comments before we move forward, right? Yeah, Madhu saying very high response. That is, the market went exactly as we expected. That's true. Faisal is saying really super, sir. Thank you, Faisal. So that's good to know. So if you have any questions, although this is not a setup or anything, this is just a trade we caught, and that was supposedly one of the biggest moves in this year. But anyways, if you have any doubts of about what we discussed on this trade of Luna, you can post it in the comment sections or just type in clear now and we can move forward. What about you, Girish? I'm not seeing a response from your end. Are you still with us? Truly the master, Sunil is saying. Thank you, Sunil. Okay, so I believe everybody is clear and analysis is nice. Thank you, Girish. So everybody is here and they liked what they saw. Why would they not? It was the move of the year, I believe. Enough of what do you call my own drum beating. Let's now move on to the next thing, which is the chart of Bitcoin before we move to the chart of Nifty's 50 or Nifty 50, right? Bitcoin. Okay, so Bitcoin, the complex correction remains complex, right? By the way, I was able to predict that this leg down will go and take it to 25,000 levels, which it did. And the analysis was nothing complex. The analysis was very simple. I just drew this trend line for the channel, and what do you call the lower point of the channel was around 25 something, 25,000 something. So that became our target. Very simplistic analysis. Uh, let's just Madhavji is saying fantastic analysis. Okay, thank you, Madhavji. Girish is typing a query, I believe. So let me just quickly take a few seconds. There are some comments I left. So Sunil was asking extended wave 3 in gold. So Sunil, I don't think the wave 3 in gold is extended right now. But even if it is, it doesn't really affect our trade setup. And the trade setup was very clear. We were waiting for a wave 4, I believe, and then if there's a reversal, it's all right. We will look for selling. Otherwise, I think it was 1867 something levels. If it sustains above it, or 1967, whatever it was, then we will consider the new analysis, which is possibilities upside. So the gold thing is not really much of a concern. At the extension is not really a concern at this point. So Girish is asking, sir, for exact tops or bottoms, are you using any time cycles apart from channels? So Girish, I'll just tell you very quickly that I have developed my own strategies on top of Elliott wave. Those are something I have been researching for 7 years or more, I believe. So I have a separate channel, just like the Slack group you see where I post all these trades. I have a Discord channel, which I will not show you here because this is a public webinar. But just like the channels on these instruments which I'm tracking, there in the private Discord, I have instruments. Instead of instruments, I have what you call wave 135 and ending diagonals and leading diagonals and patterns like flat, etc. over here. And I type in my research over here that how to predict these patterns before they happen and what are the signs and everything. So based on that proprietary knowledge, I am able to catch these moves from time to time. And if you do look at some of the past webinars I've done, I have caught a lot of these moves. I just don't point them out that specifically. This one I'm pointing out specifically because everybody's talking about it. So why not show them that we caught it? But if you look at it, crude gold, I'm able to catch a lot of these turns, a lot and lot of it. As a matter of fact, the gold move, we were able to predict this leg turning down, and also this one. This one we predicted in the last webinar. This one maybe a few webinars before, right? So it's not a new thing. And as I said, this is proprietary knowledge. I will not be able to reveal it, and I do not reveal it like this in public. That's why I have classes, right? So I hope that clarifies that. Let's move on to Bitcoin, right? That is what we are discussing at this point. So I will not go into the nitty gritty of how I was able to predict the last leg down. Everybody knew it was falling. And I just mentioned, I just drew some simple trend lines. So nothing more complex here. But at this point, it is an interesting chart to see for the very simple reason that it is still complex and it is still unclear what it is doing, right? So I'll just first of all go over the one second. I have a question here. Can you teach us in classes? Exactly, Girish. That's what I do in classes. So as I said, the next batch is in first week next month. So you can send the queries there. So anyways, getting back to the actual discussion. So there are two possibilities in Bitcoin. First possibility I will discuss is bearish one, right? Second possibility is bullish one. So see, it is a complex count. So I don't have a real classification which possibility is most likely. So let's just say the bearish one is hypo 1 and bullish one is hypo 2. But keep in mind, in this particular case, we are not really ranking them basis of their likelihood. In this particular case, both hypo 1 and hypo 2 are sort of equally likely because we don't really know what the market is going to do. So first, let's see what these possibilities are. So first possibility is that this was a wave 3 for a 4, and this was a 1, 2, 1 second, sorry, 1, 2, 3, 4, and 5. So basically, this was an what do you call impulse in the upside direction. If this was an impulse in the upside direction, then we can say that this circle 3 is here, circle 4 is here, and circle 5 is here complete. If the circle 5 is complete, then that basically means that this market is going to go lower from this level, right? If this market is going to go lower from this level, then that is exceptionally fast move over here, and fast is the characteristic trade of a wave 3. And if this market is going lower, and if this is a wave 3 like a 1, 2, 3, 4, 5, then that tells me that possibly this is in wave 3. So that would suggest that it will go much lower, and this could be a very big fall, right? So that is one of the hypotheses, right? That is the extremely bearish scenario which we are considering hypo 1. So with that out of the picture, let's go to hypo 2, which is the bullish scenario. But first, quickly type in clear if you understood the bearish outlook here, right? The setup, I'll just also make it clear. The setup is that if it goes lower than, or not lower, if it goes within this spike region, which is around 28,000 to 25,600 something, only then we will be getting back to this bearish scenario. Until it does not do that, we are going to assume that hypo 2, which is what I will discuss later on, might be in progression. Okay, I have the clears here. What about the YouTube audience? I don't see many clears there, although a lot of participants are there watching the live stream. Okay, so let's move ahead and discuss the hypo 2, which is the bullish one. So first, let me remove all this stuff from the screen. So the bullish scenario is basically stating that it's not really completely bullish. I think A is here, A, B, C, D, E, B is here, 1, 2, 3, 4, 5, C is here. Okay. So there are two sub scenarios in the bullish scenario. First one is that this is an A leg down. This is a B leg complete either here, or it is complete here as a triangle, and the C is complete down. So for those of you who do not understand what these A's and B's and C really do mean, I'll just draw a very quick rough outlook on the right hand side here. So basically what I'm saying is that first leg is down, second leg is a triangle, and then there's another leg down. So this is called A, triangle is called B, next leg is called C. So if that is the case, the A is complete, the triangle B is complete, and the next leg down C is either complete or has small downward movement remaining. Keep in mind, small downward movement remaining means it can give one more spike for C and then go up. Generally, the spikes do happen, and the spikes happening generally shakes out the weak investors or traders. And when the weak people are replaced, their positions are bought up by the strong hands or the bigger contenders, and then they take the markets higher, right? So markets generally will shake out the weak people. That's generally the philosophy of the market, or generally the way the markets operate, right? So that is one of the bullish scenarios, that the market can go straight up, or after one leg down straight up from here. I've discussed both the scenarios here. First one, I mean, the variation of B doesn't matter. So basically, the point is that the possibility of upside is there, but it is not clear right now, because the downside possibility is also there, and the downside possibility currently looks strong. Why do I say it looks strong? Because if I remove everything from this chart, 1 second, yeah. So if I remove everything from this chart, you can see the market had sort of a box range here, right? And it sort of went below that range. Can you notice that I just drew a box, right? The market was trading within that box, and right now it tried to breach it, and it is still near the, what you call, the lower region of this box, which is not good, right? As long as it remains in this lower region of this box range and it does not cross at least the middle part of it, we will have to say that this market is weak. As long as it is weak, we cannot just outright assume that there is a strong reversal or a strong bullish setup. Yes, the probability is there, but the probability of a reversal is always there. When is it not there? The market can do whenever it wants to do anything it wants to do. So this is my bias for this price action, and not price action. This is my bias for this bearish and bullish setup. I believe I have made it quite clear. And on that note, the possibilities of bullishness should be considered once the market is above 37,500, and I personally will not be interested as long as it is below 43,500. And the reason why I'm choosing those levels, again, as I mentioned, these are supply demand zones, right? So you get the point, right? The possibility of bearishness cannot be eliminated. The possibility of bullishness, I just discussed the A, B, and C leg down, right? And I personally think that the C leg may have one more leg down remaining, which will shake out the weaker hands, and then it can take off higher if this market has to go higher. So if there is any doubts in this particular chart or particular discussion I made, kindly type it in here and I'll take it right now. Otherwise, type in clear. So I'll wait for a few moments here. No doubts on YouTube so far. Trading view, I'm seeing that's a lot of tabs, bro. From TR's O speaks. Yep. TRO, that's actually a separate window I have opened up for my public broadcasts. When I'm doing my own trading, I have about 150 tabs open. So it is actually very low. I see clear here, clear there. Uh, no response from YouTube so far. Either my audio there is getting a little bit delayed, or the participants there are not interested in participating. Okay, so since you guys seem to be very clear on my discussion of BTC, one more point I would like to add here before we move on to the next chart is that if this count is correct and this really is a triangle, then I do believe that this will be the 1, this will be the 2. And while it is possible that this is the 3, 4, 5 complete, I personally think that we should wait. If this market goes sideways a lot, right, then there is a higher chance that it will fall and break this low for once. And once that happens, at that point, there I believe should be a bigger spike, what you call panic selling, that oh, BDC is gone. Right, again it could be that the bearish count plays out at that point in time, so we will not enter longs if it breaks the low. Once it breaks the low, we will then wait for this market to go back higher than this last high of 31,500. At that point we will be interested in again re-entering the positions. So I just wanted to make it clear, because while it can go straight down or the down and then up, the entries are more important. So if it goes straight down from here after congestion, we don't enter the longs here. We wait for it to confirm by going higher than 31,500. That's your first confirmation level, and based on the price action, more levels will become apparent at that point in time. Enough add-ons on the chart of BDC. Let's quickly head over to the chart of Nifty's 50. Okay, very interestingly, I was doing a private webinar a few days back. I don't really remember the exact date, but it was, I think, the last week of April. I think 29th April. Yes, 29th April. 29th April. So I'll probably post the clipping from that private webinar later on YouTube as a separate clip. But on 29th April, I was doing a webinar specifically that was private. I think the participation was about 50 plus people, something. So, in that webinar, I clearly specified that my bias on Nifty was downside at that point in time. I mentioned two subsequent levels. One was around, I think, 16,600. Second was around 15,500, which is still not achieved. And the market just went down and down from those levels. Again, as I said, I will have to post it, but I don't think people really doubt me at this point. You already saw we caught the exact turn in Luna. Those of you who are watching this as a recording later on or joining the webinar late, I was able to catch the fall in Luna in our private Slack channel. And I think 10-15 minutes ago in this webinar from this point, we have discussed the whole charts and how I was able to catch it, right? So probably check it out and you can use some points from it for your own trading and analysis. Okay, getting back to the chart of Nifty, I got a little bit deviated there. We were able to catch this whole fall. That's the whole point I was trying to make, right? Next point I want to make or see is what is this market doing right now, because that's what you guys are interested in. You don't really care for my past glories that much. So at this point in time, I am still not convinced that this market has completed the fall. Generally, a fall is something like this. There will be a leg down, a leg up, and another leg down, which is what we call a flat correction. First leg is called an A, next leg up is called a B, and next leg down is called a C. So if that was the case, this would have been the A, the B, and the C. But the market has again gone very low or very near to the last low, right? This makes me believe that this count is incorrect, and my new interpretation is that this is the A, B, and C, most likely, right? Again, this is a likely scenario, but Anywho's, if this is the likely scenario, then there will be a C. And in this particular case, A down, B up, and C down. Generally, or in most instances, C will take out the last low. So if this is the A, this is the B, then C will take out the last low, which is this low in this case. So as I said, I'm not really convinced about the bullishness of this market at this point. Stock specifically, I am looking for selling opportunities on Nifty. We were able to catch the hold down move in HDFC and HDFC Bank, but right now I'm not gonna short them. I'm just waiting. Now let's look a little bit more granularly on this chart, or little bit more shorter time frame. If I'm expecting this to be A and this to be B, then what is the C doing here? What's the exact count for this leg down? So this will be our point of reference here, and this will be the leg which we will discuss. So let me zoom into it. So here what I've done is, so I'm not even considering this as a C. I'm considering this as a part of a bigger complex correction, because I see W's and X's and Y's listed here. Okay, I'll just avoid that count because that will make the things more complex for viewers. So generally what I do is I plot out multiple ways of the market. So in this case, we have 5 views going at the same time. So the CN, or the bluish one, is our main view. Red one is the secondary view. Orange is the third. Green is the fourth. And pink is the fifth. I might run out of colors at this rate. So anyways, let's just focus on the main view, right? As I said, I don't want to confuse you guys. So the main view is suggestive that the 1 is complete here, the 2 is here, 3 is under continuation with 1 leg down remaining. So let's just quickly clear everything. So if the 1 is complete here and the 2 is complete here, then what is this? 1, 2, 3, and this is the wave 4 of that. So dot 1, dot 2, dot 3, dot 4, and dot 5. So what basically is happening here is, I'll explain it on the right hand side in a rough outlook, because I am aware that not everybody who joins these webinars is aware of Elliott wave concepts. So taking everything one step at a time, on the right hand side of the screen, what I'm going to say is that we have a wave 1, and what I'm drawing is called an impulse. So impulse is one of the most basic concepts or patterns in Elliott wave. Then we have a wave 2. Impulse comprises of 5 waves, right? In those 5 waves, waves 1, wave 3, and wave 5 have 5 waves inside of them. Okay. What I basically mean is that if I were to look at this wave 1, then it will have wave 1 Roman, wave 2 Roman, 3 Roman, and 4 Roman, and 5 Roman of itself, right? Same goes for wave 3. It will have a wave 1 Roman, a wave 2 Roman, a wave 3 Roman, a wave 4 Roman, and a wave 5 Roman inside of it, right? So taking this exact concept and putting it on the exact chart we have on left hand side, if the market is really doing what we think it is doing, then our wave 1 Roman is here, wave 2 Roman is here, 3 Roman is here, 4 is here, and lot of Romans. I have just pronounced that word so many times the YouTube might think I'm talking about Roman history. So anyways, so if the 4th Roman is completing somewhere here, then the 5th Roman will go and take out the last low of wave 3. That will complete our 3 circles. Is that clear, or am I making things confusing at this point? So focus on this part. We are comparing this part with this part. I'll change the colors 1 second. We are comparing this part with this part. So tell me guys, am I making any sense, or is it just a bit overwhelming? Just type in clear if you are still following what I'm saying. Once I see some clears, only then I'll move forward from here. Quick guys, quick, very quick. Just type in C as well. That works too. Okay, so I've gotten clears here. So now that we are aware of the fact that this is possibly the 3 here, what really is what do you call important here is not all these bigger picture counts and impulse and moves inside an impulse, all that. That's not really necessary at all. What is really necessary is the simple fact or the simple observation that we expect. Again, keep in mind, we expect that if the 4 is complete here, then a down leg is what we expect, right? So if that is going to happen, then there are a few things that should also happen. First of all, we do not want this market trading much higher than 16266 level. Let me mark it. 16266 level is somewhere here. So if the market goes higher than this level, 16266, and trades above it for let's say a day, or goes much higher than 16266, then that 266, right? Then that would suggest that possibly this count is incorrect. That would also suggest that bearish possibilities should be eliminated for at least the shorter time being, and we should consider some bullish possibilities, right? So that's exactly where the market exactly is right now. It is at 16266, right? Why am I saying 16266? How is that level important? I think Madhavji asked me a while ago, and you can just check. I think gold. Yeah, gold is where I said why these levels are important, right? So go back in the recording, check my views on gold and why I was suggesting that level, or I think it was S&P. Whatever it was, just check those two last ones, and I have clarified why I chose that level, why I choose these levels. So, anyways, long story short, setup is I will remain on the lookout for BD setups, mostly stock specific as well as on the index. But if the market sustains above 16266 for a day or remains there, then I will have to consider the possibilities that the bearish view may not really be playing out in this market. And at that point, we will turn around and consider bullish possibilities. Until then, it's all, as I said, bearish looking. So that's all for Nifty, folks. Let me know if you understood it. If you did, just type in clear. If you did not and I have a doubt, type in your doubt. I'll wait a few more moments here. I've spoken a lot. Let me get a sip of water while I wait for your clears or doubts. Okay, I see some clears here. Gyanendra is saying clear, Madhavji, Girish. So if you have any doubts on any of the other charts we discussed, you can post them here. We have discussed crude oil, gold, S&P 500, Bitcoin, the fall in Luna, how I was able to catch it, and Nifty 50. Right? If everything is clear, then officially this webinar is complete, and it has sort of extended a little bit over 1 hour, I believe, at this point in time. Right? Okay, I don't see any further questions from you guys. So as I always do near the end of the webinar, I make you guys aware of how to join my private broadcast. So keep in mind this webinar is being broadcasted on multiple platforms, right? But the most important platform is my own private segment, which is a private portal where I look at your comments the first and answer all of the questions. So to get the invite for the next webinar and join in my private segment, where is it? Email subscription. You can subscribe to the emailing list on my website. This is where you put in your email and name, and I'll make sure to send you an email whenever I'm conducting the next webinar or launching a course or whatever next thing I do. Okay, so that's the important thing, because platforms are many. Even if I broadcast on all the limitless number of platforms, there is no assurance of what is the number of people who will attend it. So that's why I always pay emphasis and always take the questions from my private audience much more seriously. And secondly, as I said earlier, I have multiple services. I have a lead video course if you want to learn passively. I have the next batch for my training program LT, wherein I discuss my proprietary methods of how I'm able to catch moves like the turning point in Luna and all that. If you want to join in the next batch, it will be in first week June. You can send the inquiries here. Next, I have also got a book here. Definitely read the book, even if you are not interested in the course or anything. The book is definitely a great value for the money it is offered for. It is way more value than what is being offered for. I'm telling you, literally. Definitely go over it, and it's not a very big book. It's not a very lengthy book. I have kept it very point to point, right? I also have a private webinar which I did discussing the concepts of the book in a little bit more detail. If you want to check that out, you can check this link on my 50hours.com/ think with the markets link. Okay. Think with the markets here. Just click on here by visiting my website. So that will be all for now, guys. And most importantly, if you have been with me till the very end, definitely share the webinar as much as you can once it becomes available as a recording on my website, right? And this is my website 50eyes.com. If you go over here and you go to the homepage and you scroll to the bottom, it will become available here in a very like a few hours as 36 applied elite webinar. And then definitely share the link, share it on YouTube, share the LinkedIn recording, share in the TradingView recording. Whatever you do, definitely share it. Any broadcast, any stream will do, because I definitely need a lot more audience and a lot more reach compared to what I have right now. So that is my message or request from you guys. If you have been with me till the end, share it and let other people benefit as well. With that in mind, let's just end this stream, and I hope I'll see you guys in the next stream as well. So thank you for being with me again.